but I believe it will lead to the next cycle top in Bitcoin will be corporate treasury overindulgence. Number one. Number two, confiscation by the government of Bitcoin. If I were the government, I could do that very easily by seizing Coinbase, which is the custodian for all these companies, or B, seizing Marathon Mining and Riot Mining in Texas, which they have a shitload of Bitcoin and all the mining capacity. That's how I would do it if I were the government.
Hi everyone, welcome to Smart Invest. For more than 3 weeks in a row in June 2025, Bitcoin has remained above $15,000. This is a strong indication that the market is moving away from short-term speculation and toward long-term strategic accumulation. This ongoing strength is a reflection of a larger shift rather than just price. The introduction of new spot Bitcoin ETFs, including one associated with a significant social media company, and the historic action taken by the U.S. government to create a strategic Bitcoin reserve are the focus of attention worldwide. By essentially creating a stable price floor and bringing Bitcoin closer to mainstream integration, these developments demonstrate the increasing institutional and regulatory support that is currently bolstering its role in both financial and political systems. Max Keiser presented his compelling theory of the Bitcoin singularity, a future in which the distinctions between people and value completely vanish in a recent interview with Bitcoin magazine. Satoshis, the smallest unit of Bitcoin, move between individuals in this reality with ease. Much like shared ideas or thoughts, according to Keiser, this is known as Bitcoin consciousness, a condition of natural value exchange and group harmony akin to how starling flocks fly in perfect unison. His goal is for Bitcoin to revolutionize how communicate, build trust, and engage in the digital world. It goes beyond charts and price movements. The discussion is changing as Bitcoin keeps demonstrating its power and applicability. It's about a future where Bitcoin transforms interpersonal relationships and the idea of value itself. Not just about profits. Remember to like, subscribe, and enable notifications for more in-depth Bitcoin content, and stay tuned for more highlights from Max Keiser's interview.
Well, it's a game theory, working out on a sovereign level. And, game theory, we saw it in the very beginning as it worked its way through the developer community in Bitcoin and in the early adopters, and then in the early movers and shakers, the early investors. And when it hits a certain level or strata in the stack of the economy and in society, it'll trigger game theory. It'll trigger more people to want to mimic what's going on because they see something that they want to be involved with. And with Bitcoin, ultimately the beauty of it is the beautifully incentivized structure of the components of the stack of technology, which includes a social stack, a social component. And so when it gets to the nation state level, the game theory once again kicks in. So Panama looks at El Salvador and they see a country that's gone from the most dangerous country in the world to the safest country in the region, that Bitcoin is a big part of what's happening in El Salvador. And so word of mouth, right? We heard about the mayor of Panama City was a big fan of President Bukele, and he was starting to embrace Bitcoin. We hear that through diplomatic channels, to be quite honest. So we offer to visit, and then once we stick our nose under the tent, all hell breaks loose, right? Because we're like, we're very good at orange pilling people. So politicians have the need, for example, jobs. That's one of the things they need to do, jobs and security. Those are two things they need, education. So when you pitch it on a government level, you try to tick those boxes because that they, at a minimum, have to look at that themselves. After almost 15 years of orange pilling people, different types of groups and things, you just have to kind of know your audience. I'll say, what on your last election campaign, what was your campaign all about? And they'll say, well, hope. Say, okay, show me the physical manifestation of hope. Can I hold hope? Where's hope? It's like Bitcoin, the fact that you can't physically hold it in your hand is not really a meaningful consideration when you're talking about what changes society. the beauty and the aesthetic inherent in the protocol appeals to our shared aesthetic in a way that motivates people to be better people than they thought they could ever be. And I know as a politician, you want your constituents to strive to be better people and to create a better community. Bitcoin is the ladder up to a higher state of consciousness and a much better society that you can help your people achieve. I've never met anybody I couldn't orange pill.
Really?
That's true, except for Peter Schiff.
Yeah. Well, he just confessed he's a Bitcoiner at heart.
You know, he says that he was responsible for creating more Bitcoiners than anybody else because they bought it in spite of the fact that he was talking about it. And I said, you know, that's like a prostitute saying that they're responsible for everybody in town getting a shot of penicillin. It's like, look, you still have syphilis. It doesn't make you a hero. First up. You know, the thing about Peter Schiff and myself is that we both started on Wall Street at about the same time, at the same firm, Shearson Lehman Hutton, and we're doing the same thing, cold calling people from the phone book to get them to buy stocks. And he never stopped doing that. He's still cold calling people out of the phone book. Like, I remember I heard a story where he was on a cruise ship, you know, on vacation once, and he hectored some old man at the dining room for hours trying to get him to buy his gold cufflinks. And he wouldn't let the guy go. It's just like, you don't understand these cufflinks, because he got bored and he had cabin fever on this ship in the middle of the Atlantic and he had to sell somebody something.
El Salvador is making it very evident that Bitcoin is in and everything else is out. By fully embracing it, the nation's ambitious new plan employs a two-pronged strategy. First, it's establishing Bitcoin as the only digital asset that counts, not just as legal tender. Second, by formally designating all other cryptocurrencies as unregistered securities, it is establishing a clear regulatory boundary. This action, which is supported by recently passed legislation, solidifies Bitcoin as the only digital currency accepted by the government. El Salvador's dedicated Bitcoin office, which answers directly to the president, is at the heart of this endeavor, providing an unprecedented degree of executive support for any digital asset. However, government action is not the only aspect of this revolution. With the launch of financial education programs targeted at children as young as 7, El Salvador is sowing the seeds of a Bitcoin future from the ground up, teaching them about sound money, Bitcoin, and financial independence. Top-down regulatory clarity and grassroots Bitcoin literacy are a potent combination that will help reshape the country's financial future. Other nations in the region are already taking notice of this assertive posture. We might witness a cascade of events throughout Latin America if Panama or other countries follow El Salvador's example. According to game theory, El Salvador's approach might put pressure on nearby governments to embrace Bitcoin or face extinction. Not only is this affecting national policy, but it may also be the foundation for the next significant Bitcoin bull market as we delve deeper into what this might mean for the adoption of Bitcoin globally. Stay tuned for more insights from Max Keiser's interview.
You're asking two different questions, right? And you're saying, what's the risk in these corporate treasury plays that MicroStrategy or Strategy pioneered? Like, where is that going? And then you're talking about gold confiscation? Like, okay, that's like a separate question. So the first question is that what Saylor identified after he identified the melting ice cube, which was his basic thesis for Bitcoin going back to 2020, you know, he could have bought it back his own stock, or he could have bought gold with all his cash, you know, but he started buying Bitcoin because it was an inflation hedge and it was compounding at a rate that was greater than inflation. And he knew that holding cash was a losing strategy. And just buying back your own stock, I think that he figured there had to be something better than that. Because up until Michael Saylor, pretty much the only thing these companies did to boost their earnings was buying back their own stock. He introduced something new. I mean, this was really a remarkable achievement and milestone in corporate finance. Then, the next thing he figured out or implemented was that, look, you know, I've got the ability to sell at the market ATM common stock with very little regulatory hurdles to jump, and immediately buy Bitcoin with that. And my shareholders, they're not going to complain about dilution because ultimately I'm buying Bitcoin, so it's accretion. So dilution equals accretion. It's something that, again, Saylor kind of, I would say, he maybe didn't invent that idea, but he brought it to a state of something of approaching perfection on the corporate finance side. So now, after tirelessly pitching this idea to companies around the world, you now have the surge of companies doing the Saylor play. So where is that going to go? Well, it works for as long as these companies are accessing cheap money. You know, that means they're taking on debt. That means they're putting debt on the balance sheet and they're loading up with Bitcoin. But then you have to say, is this yet another credit cycle? Is it like another dot-com crash in the making? Is it another shitcoin crash? Is it another bond crash like 1993, the stock market crash of 1987, long-term capital management crash, I think that was 95. And I would say, yeah, it's going to be, they're building up a huge amount of unsustainable debt that's going to blow up at some point. I don't see it happening soon, but I believe it will lead to the next cycle's top in Bitcoin will be corporate treasury overindulgence. Number one. Number two, confiscation by the government of Bitcoin. If I were the government, I could do that very easily by seizing Coinbase, which is the custodian for all these companies, or B, seizing Marathon Mining and Riot Mining in Texas, which they have a shitload of Bitcoin and all of the mining capacity. That's how I would do it if I were the government. Looking at the global financial picture and how Bitcoin gets to 800,000 and above, there is one piece of data that is at the linchpin of the entire global financial system. There's one number that tells you, like an EKG machine, what the health of the global economy is at. Do you know what that number is?
I do not.
It's the rate of interest on the 10-year Japanese bond. And I'll explain why. So, going all the way back to the Reagan era of the 1980s, the world became financialized. The Reagan-Thatcher era of deregulation. And we went from a manufacturing society to one of banks and financiers and structured finance and on corporate balance sheets deriving a large percentage of profits from doing trading activities on Wall Street. So the biggest companies in the world, they make a lot of money just by trading with Wall Street. So a car company will make a lot of money on Wall Street just trading financial instruments. A restaurant company, you become financialized. And the best and the brightest became financiers and quants and hedge fund managers. And that's the era of finance. And what drives finance ultimately is cheap money. How cheaply can I borrow my money to create my structured product, my derivative, that's going to help me put cash to the bottom line of whatever enterprise I'm involved with. And for years, for decades, the cheapest place to get money has been Japan. Because after World War II, they had a very structured pension system that accumulated trillions of yen in a honeypot of cash that was a go-to cheap place for them to get money to fund their economy. They opened that up to global financiers who can then borrow in yen, which is like 1/10 of 1%, and put that immediately, let's say, into a US dollar equivalent and get 4 or 5% on that money by simply carrying the cash from yen to dollars. It became known as the yen carry trade. So what's been happening in the last 2 years is that the yen carry trade is breaking down and interest rates are going up. So the 10-year treasury in Japan has never been higher. It's like 3.5%. And it's at a precipice now where if it gets much higher, the Japanese economy is going to have to start selling U.S. Treasury bonds to stay solvent, which would create a cascading event I call the bond apocalypse, where the global bond market crashes. And that's a $200 to $300 trillion market, which is one of the biggest markets in the world, second only to the Forex market. In that environment, Bitcoin spikes to $500,000, $600,000, $800,000 a coin as a safe haven, as capital flees the collapsing global bond market due to the unwinding of the global Ponzi scheme or carry trade. And we see it every day. You can track it by just looking at the 10-year Japanese government bond to see where we are, how close we are to the tipping point where the entire global economy goes into free fall and Bitcoin spikes toward $1 billion.
For good reason. There has been much opposition to the notion that a small number of powerful holders or businesses pose a threat to Bitcoin's decentralization. The network's architecture determines true decentralization, not the amount of Bitcoin an individual owns. The system cannot be controlled or the rules changed by any one person, business, or even a group of powerful holders. That is precisely the type of centralized influence that Bitcoin's protocol was designed to resist. Centralization concerns are also unfounded in this case. Game theory is essential because any miner trying to disrupt or attack the network would eventually cause their own Bitcoin holdings to lose value, making the attack economically self-destructive. Taking a broader view, the global financial system is changing. Profits have progressively prioritized financial speculation over actual production. Since the Reagan-Thatcher era, this was largely caused by the abundance of inexpensive money, particularly from Japan, the yen carry trade, in which investors borrowed in yen and invested in higher-yielding assets around the world, was fueled for decades by ultra-low interest rates. However, that model is now failing. A wider financial reset is being signaled by the tightening of the flow of easy capital, as Japanese interest rates and bond yields rise to all-time highs. Bitcoin stands out as a distinctive alternative in the midst of this shift. Max Keiser said without hesitation that it's asterisk to early asterisk to invest when asked if it's too late. The biggest barrier is fear, not timing. Bitcoin is still humanity's best and last chance to fix a broken system, according to Keiser. Bitcoin may move from being a niche investment to becoming a key component of the new financial era as more nations, organizations, and investors start to realize this. What are your thoughts? Is a new global economy centered around Bitcoin? Please share this video, leave a comment, and click the like and subscribe buttons to see more.